Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the 4-hour time frame where the probabilities are highest that this move to the downside is a 3-wave structure. And this is important because that means that we can relate the move to the upside here with this structure to the downside in time. So we can take a fib time from the start to the end of the move to the downside, toggling on the 0.382, and it is very rare for a structure to finish before the 0.382 related to the previous structure. And you can see that the highs here are made before the 382, so therefore the probabilities are highest. We are not yet finished here. Now, just as a little bit of extra information, if this would have been an impulsive structure to the downside instead of a 3-wave structure, what we wanted to see is a 5-wave move, no overlap between a wave 1 and a wave 4, and wave 3 cannot be a diagonal. It has to be an internal 5-wave impulsive structure. You can see that it started quite nicely, but then we started to range here, lots of overlap in this range here in the middle, and we never got a wave 3, 4, and a wave 5. Also, we ended this move over here to the downside on a high amount of volume. So preferably in an impulse, this over here would have been your wave 3, and you still get another 4, 5, but that is not what we got, and we cannot label this as a 4 also due to the overlap here. So the probabilities are highest. This is a 3-wave structure, which means that time, the 382 here, is important to keep in mind. Now, when we then look at the bearish scenario, I also again have the 382 here on my chart, because even if we would move towards the downside, the probabilities are higher to label this as either a WXY or a flat in an ABC. In both cases, we are looking for this structure to the upside to only be the first structure of then a bigger 3-wave structure, just so that we can end a corrective structure after the 0.382, which, by the way, is sitting on today, the 11th of September, 11 a.m. Central European Time. Now you can see I have a WXY as well as a blue ABC on my chart. Let's start with the WXY. WXY, either a double zigzag, WXY with a ABC zigzag in a W, then you get X and an ABC in Y, or a sideways WXY. Both is a possibility. The common target for your wave X is quite simply the 382 to the 886, taken from the low to the high of W, 56.4 to 54.1K. Now, if price would move to the downside and touch the 0.7 Fibonacci here at 54.9K, it significantly reduces the probabilities for a double zigzag WX and then another zigzag to the upside in a wave Y, and therefore it either increases probabilities for a sideways 3-wave structure here or the probabilities for a flat in an ABC. Now, mind you, these are both corrective structures, right? We in a second go to the bullish scenario. If we look at the blue ABC, which is then the flat structure, then the common target for your B all the way down here, 51.2K to 50.4K. Around the red line here on my chart at 51.4K, which is a point of control of the price action that we had here at the low at around 49K. After wave B, we want to see an impulsive wave C to the upside to still take out the highs. If we then look at the bullish scenario, we're looking for an impulse to the upside, a 5-wave structure, 1, 2, 3, 4, 5. However, inside wave 3, you can see a wide sub-degree count, 1, 2, 3, 4, 5. Wave 4 did not yet touch the 0.618 at 55.9K, so wave 4 is not yet invalidated. However, what lowers the probabilities for this to be a 5-wave structure in wide is actually the base channel. So if we take a channel from the start of wide 1 to the end of wide 2 to then the high over here of your wide wave 1, then what you can see here is that price moved out of the base channel. That is also what you like to see. You like to see price move back to the base channel, you do not like to see price breaking the base channel, as that significantly reduces the probabilities you are still looking here at a wave 4 of the wide count. So therefore, probabilities are therefore reduced for that count to be true, and it is better to label this as a 3, 4, and then a wave of 5. Now, something that we then have to keep in mind is that if this is a wave 3 to the upside, then you can see that the beginning here is not very wave 3-ish, right? We then would preferably count as 1, 2, 3, 4, 5, and then finish 3, of course, here. We never really got a wave 4. So therefore, we have to be aware of course, the 2 bearish scenarios that I have shown earlier, but this one at the moment, not invalidated, right? Definitely still a scenario on the cards here, a 5-wave structure, 1, 2, 3, 4, 5. Invalidation, a 55.3K for your wave 4, taken from the low to the high of your wave 3. And if we would pull a base channel here from the start of 1 to the end of 2 to the end of your wave 1, you can see wave 3 broke out, wave 4 is coming back, everything perfect so far, but you don't want to hit the lower trend line, also in confluence with the 0.618, right? So that is a very clear invalidation for an impulse to the upside. If you do touch the 0.618, your bullish alternative, at the moment a very alternative scenario, would be some sort of a double 1-2 here. But in other words, the probabilities do increase for the WXY or the flat shown earlier if you hit that 618, also compared to a double 1-2 here. But still, it is a bullish scenario to keep in mind. Now, locally here on the 15-minute time frame, price touched the 886, taken from the start to the end of the first structure to the downside, which increases the probabilities that this move to the downside here is corrective, not impulsive, in either a wave C or a wave Y, because the 886 is rare for 2, common for a wave B or a wave X, increasing the probabilities for this being C or Y, and therefore still at a later stage move up to take out the highs. Now on the lower time frame here, we can count this move towards the downside as an impulse. And also the volume works with us. So what we can see here is a wave 1, 2, 1, 2, 3, highest amount of volume in wave 3. Then a 4, 5, 5 made on a lower amount of volume, looking preferably for another 4 and then another 5 to create a bigger 1, 2, 3, 4, 5. Invalidation for your wave 4 in blue is the 618 at 57.2K, and a wave 4 of a higher degree, which is the blue wave 4, tends to retrace to the price action of wave 4 of a lower degree, which is the white wave 4. So in other words, the price action here is going to be your target for your blue wave 4, which pretty much means between the local high that we made and the 618. So yeah, very, very nice. And then we are still looking for a wave 5 to the downside. And what I think is very interesting is to think about the news later today in confluence with some of the Elliott wave structures that you are counting, that I am counting. And what I think would be very interesting is if we can continue to range here in a wave 4 or possibly start a wave 5 but not yet take the low, it would be very nice to take those lows during the news that we have at 2:30 p.m. Central European time, because we can definitely expect some volatility on the chart. I will be live and we can observe where price is at that moment in time, analyze the probabilities and keep an eye on the price action. Now, if we then look at the CVD divergences, then over here, the bullish CVDs that we had played out, right, yesterday and last night, I mentioned we have the bearish CVD here, which initially is not all too interesting because of the 886 touch, but of course, we kept an eye on the lower time frame and saw some bearish CVDs as well. So I mentioned last night, if we want to be bullish and look for price to take the high, we actually really want price to move towards the upside here with some bullish CVDs, but we never saw that. Instead, we moved to the downside in confluence with the bearish CVDs. Very nice. Moving down, taking out the low, bearish CVDs played out. And now we can see this bearish CVD on the AGGR chart. So here you go. Lower high on price. This one now, of course, played out. And then locally here, you can see a lower high on price, but we have a higher high on the CVD. That is what the red line represents, which is a bearish CVD divergence. Of course, you can see here as well a bullish CVD divergence. However, the local CVDs always have a priority. So for the bulls, what I would like to see is to create a market structure, consistent market structure to the upside, higher highs, higher lows a couple of times with consistent bullish CVD divergences. Because of course, at the moment, we do not see any local bullish CVD here. We do see the bearish CVD. I spoke about the news, 2:30 p.m. Central European time here, so make sure you trade safe around that hour because we likely can expect some volatility on the chart. And if we did talk about the probabilities, then on the 15-minute time frame, which is what you see over here, at the moment, the probabilities are higher to still take out the local low. Quite simply, we have bearish divergences as well, looking for a potential wave 5 to the upside, and be aware of the news. The invalidation is of course very clear. It's a very easy scenario. The invalidation 57.2k here for a wave 4. Now on the 1 hour time frame, the probabilities remain higher for price to sooner or later take out these highs compared to bearish continuation down to way below 49k. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.